The loss that I've taken yesterday puts me at 12 risks drawdown. So PNL wise, I'm far from best place right now, and yeah, it makes me think and rethink how I trade. Drawdown or not, but we gotta keep going. Not forcing, but keep going. So let's look through the markets today in Andre Market Prep. Hello everyone, this is Andre Market Prep, and we are heading into a New York opening, and it's currently about 3 hours since London opened. And let's look through what's happening in the markets as we are heading into the end of the week. Now, the oil is retreated from the highs, calming down the markets, although we can see that the risk-off sentiment still prevails as dollar and Swiss franc are quite strong today. Also, indices, Chinese indices, and DAX are quite weak today, and NASDAQ is retracing. So basically, there is not much strength in risk-on assets currently. Let's look at the yields. So the blue line chart on the left is 10-year yield, and it looks like it's making a top here. If we look at 4-hour chart, even daily chart, this is a significant level, 4.6% yield, and the price action shows that this looks like head and shoulders pattern, reversal pattern. And if we stay below 4.6, the yield is likely retrace lower. And what it means for the markets is it's supportive for risk on such as indices, such as commodity currencies, and it also puts pressure on the dollar. Now, at the same time, you can see that this pinkish pale pink line, this is basically this is inflation expectation, which is expressed through inflation protected bonds. So if it's growing, that means people expect more inflation. If it's falling, people expect less inflation, because if you expect more inflation, you would buy inflation protected bonds, right? So when these two charts converge, meaning 10-year yield goes towards inflation protected bonds, that means the real yield is getting squeezed. Okay, real yield is under pressure, which helps metals, especially precious metals. And if we look here, the yellow line is gold, and it's also looks like consolidates here. You can say head and shoulders pattern, one shoulder head and another shoulder might be forming here. And if you look at copper, the brown line, also shoulder, head, shoulder, seem to be a reversal, which is which makes sense as real yields are under pressure. Now let's get back. Let's get to the price charts. Yesterday I was trying to short Ethereum on the risk-off news about the disagreement related to peace negotiations of Iran. There were rumors that Iran disagrees on some conditions, so I shorted Ethereum here at the closure of this 4-hour candle. Then the news came out at New York session opening that they actually, that was not confirmed, that rumor, and actually they made a draft of peace conditions. And this draft includes an immediate and comprehensive ceasefire on all fronts. The parties mutually undertake to refrain from targeting infrastructure. Freedom of navigation in the Persian Gulf and the Strait of Hormuz is guaranteed under a joint monitoring mechanism, which is very risk-on. And we saw these two candles went for my stop here, so I got stopped out. If you see on the hourly chart, I shorted it here, then there was some period of consolidation. I should have taken it more seriously when it was forming this rejection. And then the draft came out, that news, and we went all the way up, taking my stop at 2,151. So yeah, unfortunate, because technically speaking, the setup makes sense to me, as we have the consolidation under a major support area, support turned resistance area, and we also consolidating right at the long-term trend line. You can see it. This trend line has been forming since February, and I still believe if we break below this consolidation, you can call it a flag. If let's say 4-hour candle closes somewhere at 2,100 or so, I am going to short this market. Alternatively, if the market goes for liquidity sweep in around 2,160s to take out stops here, I would look for shorting it from there once it closes below 2,160. That's an alternative way to short Ethereum. Now, I was holding position in NASDAQ. That was a nice entry, and I was entering here as we had good sentiment at the background. There were expectations of good earnings report from Nvidia, and I was trying to trade into this report as it was after US closing. So I bought around here at the closure of 1-hour candle as we broke above this consolidation and closed above the 10 days moving average. And I was holding it. Then the news came out about that rumor, as I've mentioned before, and I got out at break even. I got out at break even somewhere here, and then the market digested it. Then the news of the draft with the conditions of peace, this draft came out and it made this candle. Not pleasant at all, but I've learned my lesson that I need to choose. Either I just rely on a longer term price action, maybe 4-hour chart or 1-hour chart, and judging from that, I decide whether I keep holding or not, or I need to be very present. And if I see, let's say, the news came out, risk-off news came out, you react to it, you see there's an impulse, let's say here, the impulse, the market was selling off on that rumor. I sold it. That was pretty timely. But then I should have watched that the market wasn't looking weak. I mean, it was consolidating here. It was rejecting the area about 29,000. So it was forming this consolidation with sharp wicks down. And then when the draft news came out, there was a decent 15-minute candle that broke above this range. And if you decide to be very present, if you can be very present during this active market hours, well, this one is basically New York lunch, then you can trade this. But if you're busy, you better stick to price action on the higher time frame and check the market every hour or every couple of hours and see what price action actually does before you decide whether you want to actually make a decision according to the news that came out, or you want to actually confirm the news with the price action. And for me, I decided that whatever news come out, I want to confirm it with at least 1 hour chart. It's just more sustainable to me. So the markets are pretty mixed now, especially that we are heading into the weekends, and I don't expect trading today unless there's something really vivid comes out. And what I am waiting for is probably a deeper pullback in NASDAQ. If there is a liquidity sweep, something like this, I might buy somewhere here as if the breakout from this consolidation with 29,300 boundary. So I would want to buy off this 29,300 boundary. Now the similar picture is in Japanese Nikkei 225. I was actually hoping to buy it in the morning, as I missed this impulse in NASDAQ. I was hoping to buy Nikkei in the morning because it's also exposed to tech, so it's pretty correlated with NASDAQ. So I saw it here. I hoped that by the time I wake up, the pullback would be deeper and then it recovers, but the pullback was pretty tight, and if I wanted to trade this, I should have woken up like really early, and I went to sleep late, and it was physically very hard to wake up to trade this. So yeah, Nikkei grew on peace hopes on that draft for peace conditions during New York session. And yeah, the two assets that I'm looking at for a possible entry is NASDAQ, as I mentioned at the pullback, and if the sentiment turns risk off, I would short Ethereum. Okay, why not Bitcoin? Is because If you look at Ethereum versus Bitcoin charts, Ethereum is in the strong downtrend against Bitcoin. So Ethereum is relatively weaker compared to Bitcoin. That's why I'm looking for Ethereum shorts. Okay. So the loss that I've taken yesterday puts me at 12 risks drawdown. So PNL wise, I'm far from best place right now. And yeah, it makes me think and rethink how I trade, make some reflections. And this is exactly the time when some adjustments could be made, and it doesn't necessarily mean that you have to change your strategy. Sometimes the best strategies, they just have this drawdown cycle that you need to go through. But the thing is, I know what I did wrong and I want to work on it. I cannot say that I 100% followed my best version of myself as a trader. So I made quite a few mistakes that got me into this 12 risks drawdown. During this challenge, in the beginning of this challenge, I've had 11 risks drawdown, and I was taking 0.3% risk per trade. Now I am taking 0.5% risk per trade, and I am in 12 risks drawdown. So this is quite new for me, and I am going to work my way out of this hole. Okay, so if you want to see me getting out or getting smashed deeper into drawdown, follow for more. And if you have any opinion or any comment about this kind of circumstance or the market, I would be more than happy to see and to respond. So trade safely and see you in the next entry market prep.